Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Ladies and gentlemen, just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, XRP holders need to see this. Ripple leadership just clarified what may be next. If you've been watching the markets lately, you're going to want to pay close attention. Ripple's leadership has just released an update that could change the way we see XRP. And trust me, this isn't hype. Today, we're diving into exactly what's next, breaking down the latest statements, trends, and predictions for 2026. Ladies and gentlemen, before we dive in, imagine this. It's the late 1990s. People thought the internet was a fad. Only a few companies, like Amazon and Google, understood the potential. Those who positioned themselves early, they saw life-changing results, ladies and gentlemen. Or think even deeper, when fire was first harnessed 10,000 years ago. It changed human society forever, ladies and gentlemen. This is the stage crypto is in right now, and XRP is at the center of this. As always, thank you to everyone who supports this channel. Liking the video and subscribing really does make a difference. I love reading everyone's comments and answering when I get a chance. Now, with that behind us, let's break this down. The super cycle narrative, ladies and gentlemen. One theme that keeps coming up in crypto circles is the super cycle talk. You've probably heard it. Voices like top exchange leaders and institutional analysts hinting that crypto could enter a major growth cycle by 2026. The drivers, U.S. macro policy, Fed easing, and of course, institutional adoption. Now, if you look at the market today, it's confusing. Prices aren't exploding. Bitcoin is treading water, and XRP has been consolidating. So why all the buzz about a super cycle, you're asking? Think about the invention of electricity in the late 1800s. People didn't instantly see the value. It looked abstract and expensive, but behind the scenes, infrastructure was being built. When the network was ready, adoption exploded. That's exactly what's happening with crypto right now, ladies and gentlemen. Headlines may look quiet, but the infrastructure is being built behind the scenes, ladies and gentlemen. Crypto and XRP specifically is still largely tied to speculation at this point, not pure utility, unfortunately. That's changing, though. As adoption grows, as banks and institutions start integrating blockchain solutions, the price will eventually follow real-world usage. Here's a historical analogy. I want you to think of Phoenician traders building networks across the Mediterranean. At first, it seemed niche, but it enabled centuries of global trade. XRP's network effect today is like that, quietly building a foundation that could power the financial world for decades. Ladies and gentlemen, here's a rhetorical question for you. If institutional adoption is accelerating, why are prices still low? I want to see your comments about that. I want to see what you all think about it. That's exactly what we're about to break down, ladies and gentlemen. I want to talk about Monica Long. Let's dive deep into what Monica Long, Ripple's president, just shared, and why this is absolutely huge and epic for XRP holders. She said that after one of the most exciting years for Ripple and crypto overall, the industry is now entering the production era. Let this sink in, the production era. In 2026, we're not talking experiments or pilot programs any longer. This is the institutionalization of crypto. Banks, corporates, and service providers are moving from test to full-scale implementation, covering everything from stablecoins to on-chain assets, crypto custody, and even automation. Think of this like Roman roads and aqueducts. Initially slow, expensive, and limited, but once complete, they enabled trade, communication, and empire-wide efficiency. Ripple is building the roads for digital value, connecting banks, corporates, and markets globally, ladies and gentlemen. She specifically highlighted four main pillars, and that will define this next phase. First, stablecoins. No longer a side project, stablecoins are becoming a core infrastructure for global settlement, hardwired into Visa, Stripe, MasterCard, and other major payment flows. They unlock real-time liquidity for B2B payments. This reinforces XRP's utility rather than replacing it, folks. Let that sink in. Imagine a Fortune 500 company sitting on billions in idle cash. Stablecoins allow that capital to move instantly. It's like ancient Egyptian granaries, centralizing, storing, and then distributing resources efficiently to power an empire. 2. On-chain assets. On-chain vaults evolving from basic lending to sophisticated asset management. Institutions can now manage capital efficiently, transparently, and programmatically. Think of warehouses during the Industrial Revolution. At first, they just stored goods. Later, they became logistical powerhouses, managing supply chains across nations. On-chain vaults are the digital equivalent. Third, crypto custody. About 50% of the world's top 50 banks expect to formalize crypto custody relationships in 2026. Ripple's custody solutions could be central to those institutional arrangements, ladies and gentlemen. Here, I want you to think about this. It's like medieval Italian banking networks in Florence. Built trust, facilitated trade. They became indispensable. Custody isn't just storage, ladies and gentlemen. It's the foundation for a functioning, trustworthy financial system. And fourth, automation and AI, ladies and gentlemen. Crypto is the native layer for agentic AI commerce. Autonomous agents transact on behalf of businesses, executing payments, coordinating economic activity in real time. I want you to think of early factory automation in the 1900s. Tasks that required hundreds of workers can now be done by machines. Efficiency exploded. So if you add crypto and AI, it's the digital factory for money. Hanukkah emphasized the broader vision. Trusted infrastructure and real utility will drive banks and corporates to scale. This is a true inflection point for the Internet of Value, where digital assets and blockchain solutions are no longer optional, but essential. She also reinforced something crucial. Crypto is no longer just speculative. With half of Fortune 500 companies expected to hold digital assets by the end of 2026, tokenized securities, on-chain treasury bills, and programmable financial instruments are becoming part of real corporate strategies. I want you to think of the printing press in the 15th century. It democratized knowledge, reshaping society. Tokenization and crypto adoption are democratizing access to financial power in the modern age. In short, 2026 is shaping up to be the year where crypto moves from potential to production, and Monica Long's insight makes that clear. XRP's holders who understand these dynamics are in the best position to benefit. I want to talk about stablecoins and global settlement. Stablecoins aren't just side projects. They're the foundation for global settlement. Visa, Stripe, and MasterCard are integrating them directly into payment flows. Ladies and gentlemen, the gold standard created a reliable foundation for global trade. Today, stablecoins like RLUSD are setting the digital gold standard for modernization payments. By 2026, B2B payments will unlock liquidity and efficiency for corporations and corporates worldwide. This reinforces XRP's utility, acting as a bridge in payment flows and settlement corridors. I want to talk about institutional adoption for a little. Ladies and gentlemen, by 2026, half of Fortune 500 companies are expected to hold digital assets, tokenized securities, stablecoins, and on-chain instruments. I want you to think of this, the adoption of the computers in the 1980s. Initially slow, but early adopters gained decade-long advantages. Crypto adoption is following the same trajectory. Crypto ETFs, tokenized assets, collateral mobility, all growing at institutional scale. No longer pilot mode. This is the adoption in action, and XRP holders need to pay attention. Let's look at 2026 predictions. Ladies and gentlemen, top trends for 2026. Stablecoins are core infrastructure, backbone for global settlements like Roman roads. On-chain vaults, from lending to asset management. Think of Industrial Revolution warehouses. Retail brands leading crypto adoption. Consumer engagement and loyalty. Early credit systems. Agentic AI payments. Automated digital commerce. Think about factory automation. Privacy on-chain using Z-proofs and digital identity. Cryptography history. Ladies and gentlemen, all this adds up to a new financial system, not hype. All happening now. Well, ladies and gentlemen, shall we begin? Shall we begin? Apologize for the technical difficulties yesterday, ladies and gentlemen. Those normally happen when things in our offices globally spike to levels that we've been waiting. We take a knee and a timeout to celebrate our hard work and our Gucci conviction and clarity. And the most important thing I want to talk about today is Gucci discipline that led to the way. But here's your updates. Daily financial combat from the battlefield. Gold up 14.4%. Commodities up 4.2%. Commodities up 5.2%. International stocks 4.5%. Oil 4.1%. Bitcoin 2.5%. U.S. stocks 1%. Aggregated bonds 0.7%. Investment grade bonds 0.4%. Cash 0.2%. Dollar unchanged. Government bonds, 0.3% down. Okay, so let's just go back and bring up a theme that you hear me talk a lot about here because it pertains to gold. Ladies and gentlemen, if gold is doing well, right, then international stocks should be doing well. If gold and international stocks are doing well, even if commodities are not, then the dollar is either weaker or bonds are weaker. And we have the dollars unchanged and bonds are weaker. This is what we say all the time. The reason they don't like gold, ladies and gentlemen, historically, and this is so important because I'm going to loop this back into when we had our maps, and just stay with me again. The reason they don't like gold historically is because gold, to strengthen, is the same thing as saying an emerging market to strengthen. So gold is viewed as a competing currency with the dollar. Let this sink in. That's so important. Gold is viewed as a competing currency with the dollar. So when gold is up, international stocks are up. Then the currencies must be up, okay? So when we talk about things, you hear me talk about American exceptionalism, that's the dollar up, bonds up, stocks up. So, but the focus is dollar up, stocks up. If the dollar is up and stocks are up, then American exceptionalism. So what is called the BRICS currencies are up and their stocks are up. Well, that's called BRICS exceptionalism. And to be frank with you, that's where we're going, because the world's going to divide, and it's like the world's going to divide into two camps. It's like the NAFTA for stocks, the stock market. Everyone's going to go up to the same level, or in our case, move down to the same level, and they're going to come up to our level, right? If you have to rewind that again. It will make sense. Rewind it and write and take some notes. We're paying attention right now to silver breaks the Japanese yen all-time high. That's ridiculous, okay? Ladies and gentlemen, when we first put the maps up, we had the BRICS, the East tranche, and the West, the debt and leverage tranche. The most important thing, again, being financial mercenaries, I don't care what happens, because my benefactors, our benefactors, care about results, and they don't question my tactics over the last 2 decades. They've come to rely on our tactics. People, you do well for people that rely on you. This is not financial advice whatsoever, ladies and gentlemen. This is just my opinion, my professional opinion, any that retains our organization or myself. My opinion, not financial advice. Okay, so when we had the maps up there, the biggest thing that's happened is they have weaponized gold. What an amazing attack on the U.S. Treasury system and the Western dollar regime hegemon system. It was like a Pearl Harbor. They first, remember some of our videos, anyone who's brand new here, you're going to have to go back to some of my other rants. They forced metals in place in different regions. You could monetize it. India monetized silver. Gold couldn't be exported. You couldn't export gold out of certain places. You could still buy it. And then they collateralized it, right? And we went back. The first time I got exposure to people doing massive development projects was in Southeast Asia, where I saw a major developer use treasuries as a letter of credit against them to build infrastructure and roads in the jungles. Ridiculous. Amazing. Now you can use gold. So the BRICS nation have hit the Western system with the collateralization of gold, right? The BRICS union using the unit, okay, which is, from an economic perspective, flawless, right? They opened up platinum palladium exchange, the GFEX in China, to start moving a price regime over there. And ladies and gentlemen, I'm going to go back first into this and double back to all this, okay? But again, they weaponize gold. Gold is they're using, this is an economic war. You're going to hear me talk about geoeconomic going forward. Geoeconomic warfare, ladies and gentlemen. Write that down, okay? But you saw what's happening, and then we're going to tie this into XRP and HBAL, and I want to keep going here. And thank you for all the comments. If we get a few thousand likes, we'll keep this format. And I just want to keep explaining this all to you, ladies and gentlemen. But remember, the most important thing now is your discipline. We went over Livermore, your position size, your conviction, why you got into this, right? Because the sushi was fresh in Asia, ladies and gentlemen. The sushi was fresh in Asia. When we saw silver first try to go through 100 and then get rejected and pushed down, we'll go through that over again. Unbelievable, unbelievable. But ladies and gentlemen, I want to go back. When I was on the floor, I was taught that each financial outfit was a financial group We were going to learn that financial team's playbook, how they trade, who they trade for, why they trade, and when they trade, so we can figure out what they're doing. And we were toe-to-toe to them up in daily financial combat because, being on the phones, runners, clocks, the floor itself was a living battlefield, which I loved. And again, I love the chaos of the markets. I love this. I'm designed for this. And if you're here with us, you are a financial mercenary and you're going to be learning, okay? Ladies and gentlemen, gold rallied first when Goldman Sachs on the 21st at around 9:14 p.m. announced they were raising their target from 4,900 to 5,400, okay? That's when gold began its massive push higher. Goldman Sachs, which has been absolutely spot on for the last 3 years in gold, they raised their target again. And they raised that target as their old price target was hit. Every other bank had already raised their targets, but Goldman has been prudent. Goldman has been very careful. And now that their market is at their target price, the floodgates open. Now, to put this in consideration and to contest, UBS will always lag because they have investors that have a lot of money. So they will raise their targets later than everyone else because they're going to keep conservative. And they never want to be wrong because they can't afford to lose business. Goldman's client base looks to grow their wealth. So Goldman can either be aggressive and ahead of the curve or on the curve. They just can't be behind the curve, ladies and gentlemen, okay? Again, the biggest thing learning as a financial mercenary on the floor, we battle with everyone every day. So we knew everybody. We knew what they were doing. We knew who their clients were. It was really like some Roman legion battle. It was unbelievable, right? Also, nuclear stocks are doing well and silver is doing well as well. I bring this up because if nuclear is doing well and silver is doing well, then you're looking at critical minerals. You're looking at rare earths and silver is getting thrown in with it. So if gold is doing well, and I keep saying this, look, there's a global reset going on, right? And that's very, very important. And that's something you're going to hear me harp on. Framing this as we're going forward. Remember, I don't pay attention to what people say at Davos. Ladies and gentlemen, why this has been bred into me, okay? And I can go back and when I see patterns, right, of events, that's my charting. I'm charting macro events, and I'm trying to see who's saying and why they're saying it. That's what I do to get my conviction, to do part of my own recce for people that retain us and why, what I am looking at, okay? And everyone in the Patreon is beginning to see what I am looking at and why. And it tells a big story, okay? Ladies and gentlemen, 4 years ago, globalization is the messiah. It's going to save everything. Now globalization thrown out the window. 4 years ago, EVs, net zero. Now no one's talking about that. Fossil fuels. They change like the blowing of the wind. And for them, they just make portfolio adjustments. But they're playing with everyone else's lives. So I don't pay attention to what these people say. Right? I pay attention to where the development money's flowing in. Development money tells you a much bigger story than whatever anyone else says, okay? As far as I'm concerned, I just look at what some key speakers have to say and what they're doing. Ray Dalio came out and said certain things. This man, I respect his opinions. I don't agree with a lot of them. Again, everyone in certain spaces can have their opinions. Remember that, right? But, he's talking about a new monetary order, what's coming out. We've been talking about this for a year. I've been talking about this since 2020. Why I've been talking about this since 2020, ladies and gentlemen, and we're going to go back to copper and silver as well. Stay with me, okay? I'm going with this, and then we're going to get back to XRP. Why, to me, that is the answer, and HBAR, why that is the answer. I think about how many people are calling us and have been calling us since 2012, 2014, getting offtake agreements from anything that can get them. Samsung is no longer dealing with exchanges to get the minerals that they need and the resources that they need, and the metals they need. They're going directly to the miners. Our phone doesn't stop ringing. People want everything that we can get below the ground to fulfill their need going forward. And Samsung has come out and spoke about this, right? That's why silver is being bid out of reach for certain people, because silver wants to be industrial now. It's gone from being, investment grade and industrialization. It wants to be toe to toe with copper right now. It's buttressing in it. That's why a couple minutes I'm going to go over the silver and copper, how they're married, right? Okay. So, there's a lot of things changing. We're going back to what the man running, I call him Mr. NVIDIA, but he had to say, it's a kilowatt battle of energy. You'll go back and see one of the other things. But ladies and gentlemen, we're approaching what I call the event horizon in metals trading, with gold near 5,000 and silver breaching $100. These aren't just price levels anymore. They're psychological markers. When a market reaches numbers like these, attention concentrates, ladies and gentlemen. Opinions polarize, and discipline matters more than conviction. Discipline, Gucci discipline. The term event horizon comes from physics. It's the point where you cross into a black hole and you can't see what comes out the other side. In markets, the event horizon is the price level everyone sees, talks about, and seems to react to. Some think it's going much higher. Others think it's the top. But what always does is it sparks a battle. That battle can be short or long, but it's real. New buyers show up, new sellers show up. Buyers include believers in higher prices and shorts who simply cannot take the pain any longer. They gotta get out. They're getting caught up like sushi. Sellers include people who have never seen these prices before and are comfortable locking in gains for them. There's a psychological satisfaction saying, I sold silver at $100. I sold gold at $500. I was right, to all my naysayers. So don't be surprised by choppiness here, and don't be surprised by violent market moves and price action. Around an event horizon, you'll see every order type imaginable. Stops, limits, icebergs, scales up, scales down, spike slams. Everything is there. What matters, though, isn't the noise at that level. It's what comes out the other side, ladies and gentlemen, of the horizon. There are a few common outcomes. One, price touches the level and gets rejected, hard because sellers overwhelm buyers. Two, price hits that level and pushes through as shorts cover, not because fresh money wants all-time highs, but because shorts have to buy. Three, prices spike through short covering. Then heavy selling hits liquidity and uses the buying for liquidity, ladies and gentlemen. Four, the price rejects first. Big buyers step into the dip, and then the market pushes higher. That could take a long period of time. In the end, it's simple. You reach the strike, you're either above it, below it, or stuck in it. It's an option-style trade, ladies and gentlemen. Above it, you're bullish until it falls back below. Below it, after rejection, you're bearish until it reclaims the level. If it churns for days, you may be building a base for the next move. If you're churning below the base, you're building for a higher buy. If you're churning just above it, you're building for a rejection, ladies and gentlemen. Let this sink in. Rewind and replay this if you need to write this down. Think of it like leaving a casino at the end of the night. You made money. You see the roulette wheel spinning and you throw $5 on a number. That's fine. What's not fine is forgetting that you're gambling, okay? Remember that at these levels, you're gambling, ladies and gentlemen. That's okay. Just be honest about it. This is amateur hour. Amateurs buy. Professionals sell. It doesn't mean professional are always right, but the first test of these levels usually fails. If price blows straight through, that should make you uneasy because then the rule book changes. If it rejects and hovers below for several days, that's actually constructive. Expect more selling pressure in gold than in silver. Gold's market is larger, with more metals waiting to be sold. Silver has less available supply, though higher. Prices will draw out scrap. Keep the distinction in mind. If you're taking profits at 5,000, do it because you needed the cash or you have a better use for it, not because the number looks pretty. If you're buying above 5,000, if you're buying above 5,000, ladies and gentlemen, understand that you're just speculating and that's fine. Just know what game you're playing. Ladies and gentlemen, gold market has more selling pressure due to larger markets, okay? So remember, silver is a smaller supply, sharper moves. Psychologically, first test failed. Amateurs buy. You got to understand this, ladies and gentlemen. So I want to talk about why this is happening. We spoke about how a Hershey bar doesn't cost today what it cost in 1950. That's inflation eating away our savings. When you go shopping in the stores, things are more expensive. Inflation and the erosion of wealth we're seeing now in the metals market. You can see it every day. The news and legacy media are not going to tell you that this is happening until they have some answer. And to us, in my professional opinion, and this is not advice, what I'm going to get to in a couple minutes about XRP and why is very, very important, all right? So again, paying attention to if you hear, you're going to learn. Ladies and gentlemen, what did we talk about? The risk. We talked about the Hong Kong and Shanghai gold clearing corridor. We spoke about that. Okay, I want you to remember that, why that matters. Strategic pivot towards metal-based financial infrastructure. It's becoming a functional clarity gold. It's attacking U.S. Treasury. We spoke about India, BRICS, and CBDC interoperability. Remember how I told you about how the BRICS say stablecoins are a threat? Then why did Iran buy $500 million worth of Tether? If it's a financial threat, they're saying stablecoins are bad. Why did the government of Iran buy $500 million of Tether? Someone answer me that. Riddle me that, Batman. They're trying to push everything away from the treasury system. They're trying to bankrupt things. That's what they're doing. Okay, ladies and gentlemen, remember that. And then again, the China platinum and palladium futures situation, that's a challenge to CME's dominance, okay? They're trying to have their answer, like we said, the NAFTA of what's happening right now. Okay, ladies and gentlemen, I want you to understand something. The dollar dominance is being challenged here. These developments don't shout de-dollarization, but they gradually reduce the reliance on treasury and U.S. stablecoins while promoting domestic and regional alternatives. This is an East versus West framing. I keep telling you this, right? This is very big. Now, I told you about the copper-silver synergy. Ladies and gentlemen, copper and silver, they share DNA, okay? They're traded as linked electrification metals, EVs, grids, renewables, reinforcing price movements. Ladies and gentlemen, roughly 70% of global silver supply comes as a byproduct of copper, zinc, and lead mining, making silver structurally dependent on copper investment cycles. Let that sink in. These correlation spikes in stress regimes, okay? During inflationary and supply shock periods, copper and silver correlations rise sharply, with silver often amplifying copper's directional move. Ladies and gentlemen, copper scarcity tightens with silver. Falling copper mining economics and declining production pipelines imply future copper constraints, which mechanically restrict silver by reinforcing silver's upside asymmetry. What that means is, ladies and gentlemen, I've had the pleasure to be at the Gasberg mine and Batu Hijau mine in Indonesia, and they're magnificent. These mines are unbelievable, right? They are. It wasn't always so profitable to invest in copper mining for a while because the prices were depressed. You hear about it all the time. So these mines have a lag from when investment money get in, and they can ramp up production. That's why, again, everything below the ground now is being fought over, and you have everyone trying to get this. Ladies and gentlemen, now here XRP, I want to talk about how the price control is what I believe is banks quietly test new settlement systems. Ladies and gentlemen, XRP may be quietly integrated into global settlement systems right now. We believe institutions are preparing behind the scenes while price growth remains gradual. I told you that this XRP now trades no differently than institutional flow. Why I say institutional flow? Small and range bound, okay? So XRP's potential role in cross-border and atomic settlements could be strategic, not publicly yet confirmed by regulators, but ladies and gentlemen, if you look at the connection between Ripple-linked firms and major market infrastructure providers, such as the DTCC, which handles trillions of dollars in security settlements, that has something to say, okay, as far as I'm concerned. So if you look at Ripple-related acquisitions, they're connected to the ecosystem, have appeared in DTCC diagrams, participant lists, and other patents circling online, so as XLMs, okay, as potential liquidity tools. There's no official confirmation been made by the DTCC, but we can see what companies are doing and how they're being globally put in for settlement liquidity layers, right? So I think if there's a price surge before banks and regulators and fintechs are fully prepared, they don't want that to happen. They don't want the price to run too early, in our opinion. You got the BIS with as many pilot projects exploring cross-border payments. They're talking about this at Davos, okay? So these projects are often used in terms like unified ledger, shared ledger, or regulated liability. They got some network name for this, right? But they're not going to name specific blockchains. But XRP, as far as I'm concerned, that's what everything is coming to. So you got to ask yourself this question right now. Everything that we just went over was a lot. The west side of the tranche has to have an answer to what's happening to the east side. The east side has thrown all their cards on the table, baby. We see their hands. They got to hope that the west doesn't have something up them sleeves, an ace, something else, right? Which I believe they do, and I believe XRP is the answer. I believe HBAR is the answer. I believe the crypto world of where it's going is the answer, right? I think the Clarity Act will get done. This is not financial advice in any capacity whatsoever. But ladies and gentlemen, I look at charts and patterns, right? Charts and patterns for me is news events, right? The biggest compass I'm using right now is I use the spread between CME and Shanghai. I'm going to talk about this in a video on our Patreon. And if you're looking for more tips from the pits and an edge, come join the Patreon and we'll show you all these things. Take join an ever-growing discussion of a community of people who like to run ideas against each other, right? Ladies and gentlemen, that's my compass through daily financial combat. And I believe financially in this financial battlefield, we've been overrun. There's nowhere to fall back to because our money's at stake and our money's being eroded everywhere. Do you understand me? Everywhere. And there's challenges. They don't teach us in school. And what I basically said today when I'm on my rant is probably way too much for people to digest. But the answer is coming. So as far as I'm concerned, and remember what I said, Top desks right now that I got to make the numbers weekly, monthly, and quarterly. They're in metals right now because that's the easier trade for them. The momentum is there right now. That's the easier play for them to make the money they have to make, right? So that's where that is. And I just gave you the reason what we believe is happening with XRP and prices being held down lower, because when it's the glue that holds everything together going forward, prices are going to, probably going to surprise everyone, catch people off guard. But as the remora underneath these sharks, we take advantage and we feast on whatever the chaos is. We feast on the chaos. Remember that. Don't get caught up like sushi. Remember why you're in this, right? Remember what I said about the bungee, okay? Remember all these things. Don't lose your discipline right here. You got to stay, your convictions got to be so Gucci and discipline so Gucci. And remember, we're on that frosty march up that frosty mountaintop with our frosty beverage. Don't let them shake you out right now. Don't worry what the daily charts are doing. Remember, the world is changing right now in our opinions, okay? Ladies and gentlemen, why XRP holders should care? Price may fluctuate short term, ladies and gentlemen, but real value comes from adoption and integration. Historical examples: early electricity adopters or Medici banking networks in Renaissance Italy. Skeptics stayed on the sidelines. Early adopters captured life-changing advantages. Ladies and gentlemen, XRP, in our opinions, being positioned for something magnificent and amazing. That's just my opinion of their catalog of companies and why I'm saying this. Don't let the price shake you out about XRP. So you ask why 2026 would be a defining year? Well, 2025 set the stage. Tokenization became mainstream. Execution 2026, that's the big adoption, accelerates capital moves on-chain. Crypto becomes core to finance. XRP 2026 is the institutional era of crypto, and Ripple is a key player. From stablecoins to custody, tokenized assets to AI payments, the ecosystem is evolving rapidly. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Ladies and gentlemen, thank you for watching, and we'll see you in the next one. Your support allows me to keep bringing these deep dive, high-value insights to crypto community. Your likes and shares and comments matter so much to us. Stay curious, stay informed, and I'll see you in the next video. Ladies and gentlemen, have a great Saturday morning. And as always, watch XRP closely. These could be defining moments. This content is for informational and term purposes only, should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, ladies and gentlemen, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the digital broader landscape. Stay sharp, stay informed, accumulate knowledge. You move now, be remembered. This is not the end of the story. This is just the beginning. This opened your eyes, smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic.